Okay. Hello, everyone. I'm Ron Slotin, and this is Bruno Drummond, and we want to welcome you to our 7 Keys for Business Success in Brazil webinar. This is a live webinar, so we want to make it interactive, and if you're watching, you can send in questions, and we can, during the presentation, stop and answer your questions. We want to have it interactive and get the most out of it as possible. So just a little bit about ourselves and Drummond Advisors. I started doing business in '97, went down to Brazil and with a U.S. company, and we opened an office there, and we made acquisitions. We made another acquisition, so I've done the due diligence, then put the sales team together, the business plan. So I've been through the whole process a couple times, and it was a big learning experience, and I've been consulting with U.S. companies doing business in Brazil ever since.
My name is Bruno Drummond. I'm the founder of Drummond Advisors. We have today 7 offices, over 1,400 clients active, and we specialize in cross-border transactions. And this webinar is presented to you. For instructions, this webinar is being recorded, so you can replay that in a YouTube channel. And also the PowerPoint is also going to be delivered by email for you for future reference. I would love to have you guys let us know if you can hear us well in the chat, because good, because we want to make sure that everybody is active and not sleeping over there. Correct, Ron?
Right. We'll keep it interesting, keep everybody active. So the areas of where we specialize is accounting, tax planning, legal work, and business advisory services that we provide. And so we'll go ahead. So this is an overview of issues that you need when you're putting your business plan and strategies together for Brazil, because this is a very good time to be investing in Brazil, but you have to be very smart. You have to ask the right questions, and that's what this is going to give an overview of those issues. So the first issue, when looking at Brazil, is setting up a corporate entity.
That's right. The formation of an entity in Brazil can be time-consuming. From the last 10 to 15 years, usually takes a longer time. Usually takes between 3 to 6 months. However, now this has become a more streamlined process. In this slide, Ron, we're talking about the 3 types of entity that foreign investors can form in Brazil. One is the IRELI, which is basically a LLC version of Brazilian entity, that it has only one shareholder or member.
So individual entrepreneur can set this type.
That's right. And you don't have to have a second business partner. So basically 2 shareholders, 1 equity, and you can run with limited liability for that investment that you have. The other one is a limitada, which is similar to our LLC in US. We know that we have all the types of investors in our webinar, not just Americans, but we have Europeans and also Asians. And the limitada, it is same version as LLCs. For U.S. tax purpose, can be treated as a pass-through. So if you have headquarters in U.S., you can see that a Brazilian entity as a pass-through or a partnership. In the SA, which we call Sociedade Anônima, it is similar to our corporation or Inc. in U.S., which eventually those are entities that cannot be disregarded for tax purpose, either in Brazil or in U.S. Very important, the slides as well, it is you to talk about the tax regime. The Simples Nacional cannot be used when you have a foreign partner or foreign investor into one of these 3 types of entities. So then you left off only with the presumption profit and also the lucro real, which is the similar income tax based on net income. in US.
And that's kind of based on the level of income or revenue for the company of which one they.
The presumed profit is a tax. They tax a presumed profit on top of your sales.
Okay.
It is it is a very interesting assumption. The government has the assumption that you're going to have a profit, period. Mm-hmm. So whatever you have in terms of sales, they presume profit of that amount. The problem is when you don't have a profit,
right,
you end up paying tax, which can be double burned, correct?
Right. Mm-hmm.
The whole idea of tax is for you to have a relationship with the government, and you have when you make money, the government gets money,
right,
and when you don't make money, the government doesn't get money.
Right.
But in that case, it's not. It's
you have the right relationship with the government, which can be very challenging. And
it's almost like that relationship that you went through with your partner and say, hey, my money is our money, your money is your money.
Right.
That's not that's not the best way to look at it. So when you do a presumption profit, it's a very good exercise for you to double check your level of profitability in Brazil.
Gotcha. And then also in Brazil, when you set up your entity, you have to have a Brazilian national to be appointed or a lawyer.
As a manager of that entity. So, or power attorney to a Brazilian national. I wouldn't call a Brazilian national only, but a Brazilian resident.
So it can be a foreigner, but has to have
residency,
a resident in Brazil. So that's one specific thing that people need to know about setting up their company in Brazil.
And there's also this myth that in Brazil you have to have a local partner. That's not the case. You can have entities fully owned by foreigners. Okay.
Or you can come in through acquisition and then setting it up.
Yeah. Very important to add into this slide that every year you can select to be presumptive profit or real profit.
Every year you can make that designation.
You can make that selection or election actually by the end of the first month of the year.
Okay.
So you can do that. For enterprise that it's above $75 million reais in sales, mm-hmm. There's no options to be presumed profit.
You have to do real profit after 75
million reais, give and take. Okay, so it's very important. And when you do that, that election, you cannot do voluntary.
That's mandatory when you're over the certain revenue.
Yeah, you can go back to real profit only by involuntary, like the agency make you happen. But there's a few different aspects that you need to go through it.
And the reason we want to start, of course, with setting up the corporate entity, because that leads us to our second key about Brazil is, how do you, the repatriation of funds. And maybe you can talk a little bit about what you've seen as far as companies, how do they bring money into Brazil? How do they get money back out of Brazil? What are some of the challenges that companies have?
Well, it's very interesting how America has that perception that it's very hard to take money out of Brazil. Mm-hmm. That's very wrong idea.
But I do hear it a lot.
It does. It comes. I mean, mostly of our clients that comes to Brazil, they have that pain. Mm-hmm. That pain is there. But mostly of the reasons why the pain is there is because of a poor governance of that entity in Brazil.
Yes.
And I will explain it in here this because there's no such a thing that a Brazilian government holds your money in Brazil, or it's very hard for you to take the money out, or the banks, they hold your currency there. Nothing that happens in Brazil.
It's more of a question of how structure.
Yeah.
How are you going to bring, in what format are you bringing the money to the country?
any money that you bring into Brazil, there is a foreign exchange contract. Okay, that contract, it starts when your entity in US and your entity in Brazil entering that contract. That contract, it can be a contract that you capitalizing, basically you invest in your subsidiary, you lending the money to.
So you can do it as a loan or equity. Okay.
Or you can buy products or service from your subsidiary. So that's really sales to your subsidiary. Or you're paying some kind of a reimbursement of expense on the subsidiary. In all these cases, there will be a foreign exchange contract. Okay. For the two that we're seeing here in the slides, which is equity and loan, you still have that contract is registered with the central bank. If you have the the loan, for instance, that opens the calculation of interest. You have to have the
interest part of it. Right.
That also generates fees for. So you need to make sure. For a loan, you have to have the governance. When I talk about governance, is a loan agreement. You have to have acknowledged that you
loaning the money.
Right. Things that you need to put in place. When you pay this back, you have to have the headquarters has to have an invoice showing that you're charging them the interest.
Right.
The saying that you're receiving the principal and so whatsoever, and you enter in a separate contract, foreign exchange contract. Not a lot of that is done and managed by the companies. If you
are they paying different tax rates on bringing the money out of the country?
You could have some withholding tax when you repatriate funds from Brazil, except for dividends, because in Brazil you do not pay tax on dividends.
Okay.
Thus, when you do that, okay, let's assume you pay for service or you pay interest from Brazil to US, you pay that to a corporation. You can take that credit on Form 1118 on your tax returns. If it's a partnership or individual repatriating interest, you can take that tax on Form 1116 on tax returns.
So companies need to, in the beginning, consider their corporate entity, because then that's going to affect how are they going to send money in and bring money out, which takes us to our next slide where we talk about tax strategies for Brazil, because all this it has to work together when you're putting your plan together for entering the Brazil market. And there's also a perception that doing business in Brazil, you're going to pay a lot more taxes than doing business in other countries, but that's not necessarily the situation. So Brazil is, if the average is around 34-35% to do business with the right strategy, you can maintain that type of tax liability in Brazil.
Correct. Well, Brazil has today one of the highest corporate tax rates, which was 2 years ago the same as American. So in 2017, we still have at the same level, 35%. Both were very competing
Right.
in terms of those rates. You can have high income tax, but at the same token, you also have high profits because you have good opportunities.
Right.
You would be kind of wouldn't sustain itself if you have GDP increase with the high tax rates, correct? So that means even though you have tax, you still have good opportunities for profits.
Right.
That's something that you need to take into consideration. What also you need to take in consideration is those tax, when we talk about the 34 to 35% tax rates that you have right now, some of them can be creditable in US, which that means is if you're at 34, 35 in Brazil and you have a 21% in US, you can actually offset that through a credit.
Yeah, so people need to consider with the new federal tax changes and the corporate rates going down in the U.S. being lower than Brazil now. So you're saying there's ways to set up tax strategies to take advantage of that?
Of course,
Yes.
and not just looking into your business as just a CFC, we call controller foreign corporation. This is planning from a U.S. tax purpose, but looking your U.S. entity looking to the Brazilian entity. Can be a limitado or Ireli. You can have that select as a, for instance, branch, and that branch can be seen as disregard entity and flow all the money and also the credits to the U.S. entities.
So explain that real quick. So setting up your company in Brazil as a branch versus LLC or as a...
The formation in Brazil is still the same.
Okay.
Nothing changed. It's how the American
company
IRS recognize that entity is a branch, partnership, or corporation.
Okay, and that's something that people need to look at, and
Big time.
That's going to affect their overall tax strategy.
So because you can take the credit.
Yeah.
If you can take the credit, then it's just one flow, one level of tax that you pay. It could be the 34% as you see in Brazil, and that's it.
Gotcha. And then so dealing with tax strategies in Brazil, you have the federal taxes, like the U.S. Yeah. You've got state taxes like the ICMS, which one thing is interesting when bringing products into Brazil, if the product moves, you have to pay that tax every time the product moves. So your distribution strategy has to take that into effect. Now you can get the credit back, but you have to pay up front, and you don't want that's cash you may not know that you've got to put up front to pay that tax. So that's something to consider in Brazil. And then municipalities each have their own tax structure and tax rates.
For service,
For service.
It's called the ISS.
And it can vary by different cities. So when you're looking at, where to locate your business, there's tax incentives for different cities and different areas and states. And then you have to follow all the city, and there's environmental review, and there's some other things about opening your office that they
call the alvará, which is the license of doing business.
So when you're setting up corporate entities, you have these taxes, a lot of acronyms to learn, but federal, state, and city taxes that you'll have to pay.
In that level, all these tax in Brazil they call indirect tax.
Mm-hmm.
In the U.S. they call the VAT tax, correct? A value added tax. Very important for Americans or foreigners doing business in Brazil is some of these tax they are creditable if you do a transaction in one state and you do a transaction in another state. You might be able to credit them. In some states you cannot. You might have to pay in one state and pay another state and have that as a prepaid for future use of that specific state. When that happens, it's not that your tax hit your P&L. It's still credit, invalid credit. You just don't have the money, correct? So you have to pay to do the business. And for a startup or someone that it's a greenfield, going to Brazil and try to do your business down there, any money counts.
Right.
So it's very important not to worry about the cost itself, because these rates they are similar throughout the states. It's just how you pay it. So you might be able to prepay tax that eventually only in a future transaction that you're going to be able to use that tax, because you're moving these assets or this inventory among various states.
Gotcha.
It's very important.
We have
to do that.
Question that we want to answer. All right, Bruno, what is the real perspective for you of a tax return in Brazil to simplify all these taxes?
Oh, that's a great question, and the Congress is talking about this. Congress is trying to create a reform in Brazil Congress, correct? And we hope
U.S. Congress, we don't know what's going on.
That's a different story.
Okay, in Brazil.
in terms of, I'm not a big fan of indirect taxes. Okay, the reason why is um, you if you have high tax on goods and service, you actually reduce the opportunity for wealthy among the people of a country.
Mm-hmm.
So if you look in the Brazilian structure, you have too many tax over tax and over tax. So if you manufacture a product in Brazil, you have a tax that you pay for raw material, then you have a tax you pay for WIP, and then when you sell it, your final customer pays for a tax on your final product. So you have tax on tax on tax.
Mm-hmm.
That doesn't do any good for individuals that eventually buy products and need products and need service.
So is there a movement to simplify the tax returns in Brazil?
They're right now in my understanding, in the low house they have three different types of reform in place, and I believe one it's trying to streamline the indirect taxes.
Okay.
If they do that, that would be good. I think it would be better. The better way for Brazil, the better way to do this would be reduce the cost of transactions. By doing that, it's take off all the taxes related to goods and service. When that happens, you're going to see more transactions among the individuals,
Mm-hmm.
and that actually drive wealth for Brazilians, for Brazil entities, and so forth.
Gotcha. So we talked about tax strategies, and we talked about different levels. So we'll go to the next slide.
And that's a really good question, Ron.
It was good.
Yeah.
So now, so you've got your strategy for Brazil, and we've talked about corporate entity and expatriate the funds and taxes. So now you're starting to look at hiring people in Brazil. So what are the main things that U.S. companies or international companies need to know about getting ready, how the labor market is different in Brazil versus maybe the U.S.?
Well, very important for Americans when they go to foreign foreign jurisdiction is to understand the labor market. That's period.
Yes.
Okay. Brazil, they don't have the same contracts that an American has. What they call at will contract.
At will hiring in the U.S. Yes.
U.S. it's very common. You have been through this many times. At will, it's a relationship between employer and employee that it's really open. It's a relationship very open. There's no too many restrictions to it. It's purely a contract and so forth.
Yeah, you don't have to give much notice to let someone go, and they don't have to give you much notice if they're taking another job. But that's not the case in Brazil.
Not the case in Brazil. Brazil, you have the CLT, it's the employee law, and you also have the subcontract, which could be called a version of agency in principal relationship. But eventually, when the principal has too much power over agent, eventually
they lose that relationship.
That relationship it's gone. Correct. It's actually the employee. Correct. Yeah. You can't have a dog that flies like a duck, walk like a duck, and swims like a duck. It's actually a duck.
Yeah.
Correct. And that's very important because that mindset is exactly the same. If you have principal and agency relationship, and the principal relationship, there's too much control. You see an employee relationship.
Yeah. So you're talking about like an independent contractor. You have to be, and like in the U.S., you have to have a lot of rules about what you can ask an employee to do and time and.
Exactly. So you have control, and that person comes in the same time, and he doesn't have flexibility. He has only you as an employer, There you go.
But you can do it in Brazil.
You can do it.
But the majority of people, of course, you're going to have full-time employees.
Yes.
So there's a concept of 13th month where they get an additional month's salary that's usually spread out through the 12 months.
Yeah, the cost usually can be spread out to 12 months, and then eventually you pay the 13th salary in the last 2 months of the year.
You have 30 days vacation days.
Yeah, you pay for your vacations. It's a full month of vacation. You have the maternal leave. That's something that's been there for a long time. And you have
P's and COFINS taxes.
Yeah, you have a Social Security tax,
workers' comp,
insurance,
employment insurance,
and employment.
So the overall is that you're going to be paying about 60, 70, maybe up to 100% above their base salary in extra fees.
That's one that's pretty good. But when you create all the benefits, you might get it to 100,
with
105,
the help and everything else. And but the good flip side of that is the exchange rate is very favorable for U.S. companies, about 4 to 1 now. So you're able to get very qualified, talented, skilled labor in Brazil if you're paying them reais, it's a very good value for U.S. companies.
Yeah, it is still in a really good moment where the government is getting off from changes, passing some laws that are eventually going to create some traction to the Brazilian economy. We still have about 13 million people unemployed, mostly high educated employees. We went out of a kind of a recession over the last 3-4 years. Last year was a year that we kind of slide. We increased. We slide in terms of GDP. We just grew about 1%. But in the previous 3 years before that, we lost about 10% of the whole wealth of GDP. So there's a lot of room to improve. There's a lot of room to make profits, and there's a lot of people hungry to work.
Yeah.
So it's an opportunity to especially here in the U.S. where you have the labor market's pretty tight. Not because there's a lot of people. It's actually because there's no one to work. There's a lot of jobs, but no people to fulfill these jobs.
There are opportunities to hire those people in Brazil.
Someplace else, yes.
And so going into our next key is that, with all this tax planning and understanding the labor market, you really have to set up your accounting and audit controls. And, I hear talking to controllers about the difference between maybe U.S. GAAP accounting and Brazil GAAP, and can you talk a little bit about that and what you see your clients having issues with?
It's very common that when you go to Brazil, you eventually have a different GAAP. Okay, Brazil use IFRS, and there's some just difference between the first IRS version. So it's a Brazilian version of IFRS. So from there to US GAAP, you have a few differences in lease accounting, revenue accounting, multi-elements accounting, and so forth. From that Brazilian GAAP, you also have a few differences between tax GAAP for Brazil. Okay, that's also something that you need to understand. Those changes are really management needs to understand that so they can better run their business, correct? If they don't know how to understand those gaps, eventually you're going to get caught up in doing something that I shouldn't be doing. Kind of prepaying tax that you shouldn't be prepaying tax, right? That's where we talk. In the end of the day, cash is king. No matter what, you can't. Doesn't matter if you're in Brazil, China, it's about managing cash, correct? But you still have to take that and reflect that managing cash into your books in different gaps. And that translation can be a little brutal. And for Americans to come in and try to do that, they might struggle on that aspect. Nothing wrong. unless they understand the inputs of the tax, after a little while they can bruise, because it's whoever in this call knows how to deal with the sales tax in this country can easily take Brazilian tax system like a piece of meat, because we're not talking about a tax system that it's an accounting level. Yeah, because here you have also very robust tax system. No, not that far from Brazil, but if you understand how a product moves and how you have nexus in US, you can be very successful in Brazil as well.
And then also it's from, you see with Sarbanes-Oxley, SOX control that are needed for companies doing business. How would you explain auditing in Brazil?
Well, auditing in Brazil, there's many aspects. All aspects of auditing Brazilian entity, it comes from a stakeholder. Right? That can be the agency, the Brazilian SEC. They can be through IRS, Brazilian IRS. It can be a bank. Can be the shareholders. Can be a contract. Can be a client. Can be a bank, a loan holder. Correct. They all have the right to request an entity to be audited. Eventually, putting a company through an audit, it's always a good exercise for corporate governance, where you check your controls, you check your accounting, methods, and also if there is any issues in cutoff in existence of these assets and so forth. It's very important, especially for U.S. entities that are does business in Brazil, to get really good control over procurement, contracts, clients, relationship, so you can corner your risk in such a way that you don't have anything for legal contract or something related to labor contract or anything related to bribery.
Because the Foreign Corruption Act in both countries.
Yeah, both countries have Foreign Corruption Act and so forth, and that can be an issue. Not that it might happen. We've been through this. Being in our practice over 10 years, we never saw any issues on that. We always looking to the procurement team, make sure that the procurement team is tight. They have a really, really good team that they put in place and make sure that they cruise along.
And what's been your experience with the purchase price allocation?
Purchase price allocation is always an interesting business in Brazil, because when you purchase something in Brazil, you might be on the bargain purchase right now, because the prices are lower than what could be the expectations of value in the future, and that reason it's always hard to support that purchase price allocation, correct? But in the past, during the 2008 and 2014, there was a huge expansion, and you saw many assets overvalued 10, 15 times PE, which is good. But the metrics in Brazil, it's a lot less than the US. So you might have multiples there that are very insignificant than American multiples, which is great for American business. You might do an investment in Brazil that flows up into your American entity, has a better multiples there, and you just invest in multiples that it's bring you more revenue stream, but in a location that has less for your money, correct? Right. It's more for your money, but costs less for you in the end of the day.
Right. And then also it's typical in Brazil that your accounting company does your payroll just because of all the tax requirements to file?
Yes, Brazilian payroll, which is probably the next key there. It's pretty intense, and you have many change happens on a monthly basis. Mostly of the payroll, it's done through outsourced entities.
Got it. And then that brings us to the sixth key, which is let's talk about transfer pricing.
Mhm.
Tell me a little bit of background. I mean, what is the transfer price? Why is it set up? And then how do companies deal with it?
What is a transfer price? Many people has the difficulty to understand that, but that's okay. It's not used to everyone, but anybody that is doing cross-border transaction, they will face transfer price no matter what.
Right.
Okay. Transfer price is when there is a transaction between one entity and a related party entity. Those entities does not have to have common ownership, as long as they have one contract.
Right.
And that contract had lost that relationship, the principal and agency relationship, then you have transfer price. Okay? So the whole idea of transfer price is to make sure that the transactions are done, okay,
Fair market value.
fair market value, and we call arm's length.
Mhm.
So it's basically arm's length / fair market value. So every time you have an entity in US selling to an entity in Brazil, or an entity in Brazil selling to an entity in US, you have transfer price. That's very important because Brazilian has a very low number of methods to run transfer pricing, while in US you have probably between 17 and 18 types of transfer price methods. So you want to make sure when you do this exercise that you can meet both standards at the same time.
Right.
And you feel comfortable that both agency, when I say call agency, everyone, it is the revenue agency that actually collects cash. In Brazil will be the Receita Federal, in US will be the IRS. You want to make sure that they in both requirements in terms of margins, in terms of arm's length, in terms of contracts, in terms of documents that shows you and the time, the period of that relationship.
Because basically both government agencies want to make sure they're collecting all the taxes that they can.
Yeah,
And if
exactly.
you if you don't do it correctly, you could be subject to penalties.
From one or the other.
Right, right.
But remember, if you're not fair to one, you being pro business or pro to other.
Right.
Correct?
Yes.
The other one is not going to call the other and say, hey, you're wrong.
Yeah.
I'm getting paid more here
Yeah.
because of you're not checking on your transfer price. But that adjustment in your books, like the
Brazilian thing.
Brazilian
So this is an important concept for people to know about in accounting and make sure that they're
all
following.
our clients has transfer price.
Yeah.
So transfer price can happen between the transactions, the entity with the shareholders, the entity with the sub, the entity with the subcontract that it's only do that.
Mm-hmm.
They miss that as principal and subcontract relationship. It's very important.
It's good services, software, everything. You've got it.
And that's an area that it's easy fix for both agencies because they know that it's like a fish in a pond that has a lot of fish. Anyone that they caught, there will be an adjustment. There's nothing wrong because the market's not ready for it.
Yeah.
It's not specifically proved that the probably like out of a client list, we see throughout that mostly of them start to know these thoughts of transfer price. Probably 10 to 15% has the right controls, documents ready for it.
Right, and the majority
is like it's basically learning and trying to catch up with it.
And that's why we put this as one of the keys for people to think about it ahead of time and how to set it up.
On top of that helps a lot of the burn between the two countries. That's also one of the point that helps reduce the effective tax rates in Brazil, for instance. Mm-hmm. You can go from 34 to 25 and so forth. Right. It's very important.
And then that brings us to our seventh key, which is understanding industry-specific regulations. So I've done a lot of work with pharma, biotech, medical devices. All these come under the purview of Anvisa, which is the Brazil equivalent of US FDA. And it's interesting because Anvisa doesn't accept FDA or European approval. You have to go through the whole process. And so you really have to understand, put that into your plans, the cost, the timeline. They may have to do a good manufacturing practice where they come and inspect your facility. Also, if you're in that business, if you work with a distributor and if they register your product, they could own your brand for 5 years in Brazil. But you also have the option of using a third-party master agreement holder where you maintain the rights of your brand. So when you go to distribution, you need to understand how to put up the sales contract, who's going to own the brand, what happens if the distributor doesn't work out. You don't want to be in a situation where you don't have the rights to your product in Brazil. But it goes for a lot of areas. If you're in agribusiness, you're going to be regulated by MAPA. If you're doing clinical trials, you have to get Anvisa approval, plus you have to get approval of local and the National Ethics Committee. If you have parts for, let's say, airplane, it needs to be approved in Metro. For any electrical devices, has to be. Yeah, that's like the UL equivalent for the U.S. They do accept test results from other countries if it's less than 2 years. So there's a lot of nuances.
Anatel, you also. Anatel is another
Anatel
agency
for telecommunications.
Those are very important agencies that are regulated the products, and most of them, after you get passed, you actually have to print the license into the product, which is very interesting part.
Yeah. So one advice that we give to companies, depending on your area, to understand all the specific regulations about bringing your products into Brazil and understanding the impacts of those products, and that's going to affect your overall business plan. But we say all this with a lot of encouragement and optimism. I've been working in Brazil for a long time, and of course you have, and we really feel like this is a good time to invest. And if anybody has any questions, this would be a good time. We can kind of summarize what we've been speaking about. I think we have a few.
There's
See, I have a question about the fair price. Is it too late?
Let's see here. Transfer price?
Is that fair price or transfer price?
Transfer price. Yeah, is that too late? No, go ahead. Go ahead. Try to put a question on it.
How can you calculate a fair price between the two entities?
Two entities. Let's assume that is. Let's assume a very common type of transfer price issue here, correct? You have an American subsidiary, Brazilian subsidiary that American provides service to Brazil, correct? So if that Brazilian subsidiary, let's assume that they're providing procurement service, okay? So you are the Brazilian subsidiary, and I am the headquarters.
Okay.
And that cost is sitting on my books because I have a staff account at $60,000.
You have a staff account at $60,000 in the U.S.
In U.S.
So if you have the equivalent staff account in Brazil.
That's the first thing we do.
Okay.
So how much would cost a staff account in Brazil for fair market value for that? So let's assume you go to the marketplace and you find someone at $30,000, right? So the $30,000 will be equivalent to $60,000 that I have here, right? So in that case, in this simplistic example, I cannot charge you $60,000, even though that's a fair cost that I have. Okay, because if I transfer the $60,000 to you, eventually the Brazilian government can come back to you and say, listen, Ron, the $60,000, it's overpricing, costs too much. Because in the marketplace, you have $30,000 for the same service. Yeah. So in that case, you need to make an adjustment. You can charge 60.
Mm-hmm.
Out of that 60, 30 not going to be deductible.
Right.
Okay, you can recapture the $60,000, but the $30,000 that you could not deduct in Brazil is still going to be taxable in Brazil.
That's taxable. Okay.
Does that make sense? See if we explain correct our. Okay, nah.
When it comes to currency exchange.
How can we calculate fair market between the two? Yeah, that was answered. Another question, people. Let's see if we have questions coming up. Come on, you better have questions. Wait, I can't believe that we.
Okay, how does the importation tax impact the price point of good
and its profitability? That's a great question.
Yeah.
Mostly of our clients that we saw throughout these years, they don't do the exercise to get the final product on the end of the line. They usually, well, I sold this.
The sales price in the U.S., I think it's going to be the same sales price.
Same price in Brazil, and they do some sales through drop ship. If someone, I don't know if all of you guys know what's drop ship. Drop ship, it's kind of like selling through Amazon. You sell in Amazon, the Brazilian pay for you the goods, and then Amazon ships that goods to Brazil. So that person imports the product. When a individual imports the product, they have different regimes. So they might pay lower tax
import tax
to import the tax.
Yeah.
Okay, which is okay. Drop ship products in Brazil will work. It is a business model that will work until you're like, I want to play a bigger role in the market,
mm-hmm.
right? So then I want to move inventory to Brazil and then sell for quick turnaround. Yeah. When you do that, you take that into consideration how much tax you need to pay for importing those goods.
And it usually ranges from 60 to 100%.
Yeah,
on taxes, which a lot of companies need to realize that because they need to be competitive in Brazil. In Brazil at their price, they need to realize that.
So then you need to do a few things. You can bring different products. You can assemble in Brazil. You can bring the parts and assemble in Brazil.
I do have clients that do that.
Yeah, you can licensing the product. Say, oh, listen, I have this pen here, and I have the technology. You go and hire a manufacturer and say, hey, Ron, can you manufacture this so I can sell this to my final customer? That's a option too.
Mm-hmm.
There's many options that you can run with it, and it's fair. I mean, you need to consider other options. We have really good manufacturing that start that way. They brought in the past, they were selling parts for the competitor equipment.
Mm-hmm.
So they're changing they had comparable parts for that equipment. So he started that way, and then 2-3 years he developed that business to licensing to the product to a third party.
Uh-huh.
The third party built it, and he sold that product to a final customer. And then 3 years later, he started manufacturing in Brazil, and the business is doing fantastic. It's growing, and went from zero amount to
having a successful business. But he took kind of a long-term approach to doing it.
It's 50 today. It's 50 globally. It is a 50% revenue. It's in Brazil.
And you can export the rest of South America out of Brazil.
Yes.
Which is key. And the Brazil market is 70% of South America economy anyway.
Yeah, don't tell the Argentinians.
Okay.
They get upset. Or the Mexicans.
Yeah.
Joking for it. Sorry about that.
But
For our friends from Argentina and Mexico, you know that I was joking.
but the thing is that it is an opportunity for American businesses to go down to Brazil, and if you're smart and you have a good plan,
Yeah.
and you ask the right questions, you can be successful.
Yeah.
So we appreciate everybody joining in with us today, and hopefully it was informative. And if we can ever be of help, please send us an email or call us, and we'd like to continue to promote business between the U.S. and Brazil.
Yeah.
Thank you.
Hopefully to talk to you all again. Thank you very much for your time. Have a great day. Bye-bye.